Today we have a really interesting one, an analysis report on RKLB.
Yeah, a very high-energy, bullish breakdown of their Q3 performance.
It really leans into the record revenue, that $155 million figure, and the 37% gross margin.
And it uses all that to position the recent stock dip as a clear buying opportunity.
It's strong. I'll say that right off the bat.
It really is. I mean, it hooks you immediately with that title. RKLB shocks Wall Street.
And it follows through. It jumps right into that narrative about defying expectations.
The whole perpetual cash burn idea that's followed the company. This analysis frames the Q3 results as, definitive proof that the business model's working.
I agree. And the focus is so sharp. It all comes back to that 37% gross margin. That's the hero number.
It is. The foundation here is incredibly solid. I especially like the point about the space system segment being the real engine. It's smart.
It helps position them as more than just a
taxi to space.
Exactly. But if the goal is to really live up to that headline, to truly shock the reader with that 37% number, the analysis needs to benchmark that figure against specific public industry standards.
Okay, so you're saying the proof for the shock needs to be more analytical.
Yes.
Right now it says the margin is unheard of, and it vaguely compares it to standard aerospace.
Right, and it notes that SpaceX is private, which is true, but it's also a bit of a dodge.
So the weakness is that it's relying on descriptive language instead of hard data.
Absolutely. You can't just say something is a shock. You have to show it. And look, the weakness is that this qualitative stuff, it just weakens the whole justification. Without a concrete number to compare it to, you're just asking the reader to trust the hype.
It feels more like a promotional statement than a real hard-hitting analysis.
Precisely. We need to ground the exceptional nature of that 37% in something verifiable, something in the public markets.
So how do you do that without losing the high-energy feel? Adding a bunch of dense data could, slow it all down.
You don't need a whole spreadsheet. The suggestion is just to introduce one or two specific, verifiable data points from comparable companies.
Public companies.
Public aerospace, or even better, space components companies. That establishes the numerical context. It's what makes it a high-level analysis report and not just an opinion piece. So for instance, instead of just saying aerospace margins are often lower,
Which is pretty vague.
very vague, the report could specify that typical aerospace components firms often operate in, say, the 20% to 25% gross margin range.
Oh, I see.
Or it could even reference the Q3 gross margin of a specific public competitor, maybe a defense contractor's components division.
That's a really sharp adjustment, because then the reader sees 37% right next to 20% or 25%.
And that gap is the shock. You're not telling them it's a shock, you're letting the data show them.
You're forcing them to see the difference.
Right, this audience knows what they're looking at. They get financial statements. You just need to show them why this number is a statistical outlier. It proves the claim.
I like that. It validates the entire premise of the report. Okay, so that's the first point. Let's build on that. The margin is exceptional. We've proven it. But how do we prove it actually matters for the bottom line?
That's the perfect transition. Because to really deliver, the analysis has to directly tackle that burn cash forever thesis.
And it needs to go beyond just the gross margin to do that.
It absolutely does. This is probably the most critical point for making the entire argument airtight.
The report sets up this great conflict, right? Wall Street expects cash burn, but here are these amazing gross profits. But there's a vulnerability there.
A structural one. The entire narrative hangs on disproving the cash burn, but it's only using gross margin as evidence.
Which is calculated before operating expenses.
Exactly. And for a growth company like RKLB with massive investment in R&D,
For all the costs for Neutron.
that OPEX is huge. So gross margin alone doesn't actually disprove the cash burn theory. It's an incomplete picture.
And any sophisticated investor is going to spot that gap instantly. They'll say, great gross margin, but what's your operating loss? What's your cash flow?
Right, because if the R&D for Neutron is just eating up all that profit and more, then the cash burn story is, still true for now.
It undermines the whole case. It leaves the reader wondering how that 37% actually translates into financial discipline.
So the suggestion is to incorporate a brief, high-level look at OPEX, or even free cash flow movement.
Just a little something to bridge that gap.
Yes, to show how that gross profit leads to better financial control. It's what proves the business model is working claim.
Okay, but what if the numbers aren't great? I mean, the net loss is probably still pretty big because of Neutron. Isn't there a risk that adding that data actually confirms the cash burn thesis by mistake?
That's a really fair question. It all comes down to the framing.
Okay,
You don't just drop the number in, you have to frame it as progress. The key isn't the absolute number of the loss, it's the improvement, the narrowing of that loss. So, for a concrete example, the report could mention if OPEX as a percentage of revenue is shrinking.
Or if the net loss has gotten significantly smaller compared to last quarter or last year.
Exactly. It's about the trend. So you could add a line like, and while the 37% gross margin is impressive, what's even more telling is that the operating loss has dramatically narrowed to just X million.
Ah, so you connect it.
You connect it, and you add context. You could say, especially considering Neutron R&D costs are being absorbed in that figure.
That's a masterful way to handle it. You're actually tackling the bear case head on. You're saying, yes, we're spending on R&D, but look how much more manageable that spending is becoming.
It proves financial discipline is improving alongside operational efficiency. It transforms the analysis from just celebrating a number to actually using the financial statement to disprove that old market skepticism.
That makes the whole report so much more robust, logically airtight.
All right, so that brings us to the final piece of the puzzle.
The end of the report where it pivots to the stock price.
Right. The buying opportunity segment. So to really elevate this from, hype with facts to a truly robust analysis, that section about the stock dip needs to analytically integrate some risk.
A counter-argument?
A counter-argument, exactly.
As it is now, it just calls the dip a healthy pullback.
And blames it only on Wall Street taking profits.
Which feels a bit too simple.
A little dismissive.
It's one-sided. And for a serious analysis report, that hurts credibility. Look, stocks don't just pull back for no reason. Profit-taking happens, but it often accelerates when a real risk comes into focus.
And just ignoring that makes the conclusion feel, predetermined.
It does. It feels like the analysis is trying to sell you something, not inform you. But again, I have to ask, if the whole point is to be aggressively bullish and say buy the dip, why would you want to introduce a risk factor? Why give the reader a reason not to buy?
Because you strengthen your argument by acknowledging and then defeating the counter-argument.
Okay.
The suggestion isn't to change the conclusion, it's to introduce one major recognized risk factor, one that could justify the profit-taking, and then pivot right back to why the Q3 fundamentals still outweigh that risk.
It shows you've done your homework.
It shows analytical honesty, and it makes your final conviction that much more powerful.
So what's a good example of a risk here? What's the thing everyone is watching with Rocket Lab?
Well, it's got to be the Neutron timeline, right? The company's future valuation is so heavily tied to it.
So the uncertainty around that timeline is the biggest risk factor.
It's the most recognized one for sure. So the report could briefly mention that, maybe reference the current Q1 2026 target.
And then use the Q3 results to argue against it being a deal breaker.
Exactly. For instance, you could say something like, while some profit-taking may reflect market caution around the ambitious Neutron Q1 2026 timeline,
Acknowledging the bear case.
but the 37% margin performance in Q3 provides strong mitigation. It proves the current business is robust enough to help finance that future growth.
So the operational engine is running smoothly, even with those external pressures.
And that is why this dip remains a buying opportunity. See? You're not ignoring the elephant in the room. You're using your core thesis to neutralize it.
That is a very sophisticated way to frame it. It turns a one-dimensional buy call into a three-dimensional thesis that actually respects the market's concerns.
It's the difference between being a cheerleader and being a sharp analyst. A robust analysis has to address risk. By doing so, the bullish conclusion feels earned, not just assumed.
That's really outstanding feedback. It gives a clear path to keep the bullish energy, but make the logic unassailable. Okay, so to quickly recap the big opportunities for this analysis report.
Let's do it.
First, to really sell that shock factor, you need to validate the 37% gross margin. Add specific numerical benchmarks from public competitors.
Make the readers see the statistical gap for themselves. Second, to fully prove the business model is working, you have to go beyond gross margin. Integrate some OPEX or cash flow data to show the operating loss is narrowing.
And directly counter that old cash burn thesis.
Prove that efficiency is translating into real financial control.
And finally, to make the buying opportunity argument credible, you need to strengthen it by briefly addressing a key risk.
Like the Neutron timeline, acknowledge it and then use your core Q3 data to mitigate it. It shows analytical honesty and makes the final call much more powerful.
Right.
You do those three things, and this analysis goes from being very good to being truly exceptional. It takes that high energy and backs it up with undeniable, robust analytical proof.
It's a great piece of work to start.